This is Nightly Business Report with Bill Griffith and Sue Herrera.
Stocks tumble, political anxiety in Italy rocks markets around the world, and now investors are wondering if this will be a summer of stock market discontent.
Hungry for deals, a little-known private equity firm adds another restaurant to its portfolio as it quietly expands its food empire.
On a tear, home prices keep going up, prompting one industry expert to warn it's not sustainable. Those stories and much more tonight on Nightly Business Report for Tuesday, May 29th.
And we bid you a good evening, everybody. Welcome back from the long weekend. Investors did not exactly receive a warm welcome back from that weekend. Stocks sold off hard first thing this morning, and it all started in Europe, where political turmoil in Italy sparked concern that the already fragile European recovery could unravel and cause global growth to slow. And the market certainly didn't like that. The Dow had its worst day in over a month today, down over 391 points to 24,361. The Nasdaq fell by 37. The S&P was down 31. So what's this all about? The selling was the most intense in the financial sector. J.P. Morgan, Goldman Sachs, and American Express were the three worst performing stocks in the Dow today. And Wilfred Frost tells us what's happening in Italy and why Wall Street cares.
Italy looked set last week to form a new government that would have seen an unprecedented coalition between two populist parties, the right-wing League and the left-leaning Five Star Movement. This had already spooked markets, given both parties' disregard for fiscal discipline and a past romance with leaving the euro. But late last week, things got worse. The president blocked the formation of the coalition when their choice for finance minister was too overtly anti-euro. This has led Italian assets to plummet further because it will almost inevitably lead to fresh elections, and markets fear a further surge for the populists. Italy is the third biggest economy in the Eurozone. Its debt to GDP is 130%, and its banks and European and global banks hold a lot of Italy's sovereign debt. Italy's bond market is the third biggest in the world after the US and Japan. This has led to banks globally selling off. There has been some contagion with other European nations' bond markets, like Spain, Portugal and Greece, albeit much less than 2010 to 12. Overall, this is still an Italian issue, not a Euro-wide issue, and Europe's economies are far stronger than earlier this decade. And could markets be overreacting? In the March elections, both League and Five Star said they would not rule in a coalition together, and they dialed back their anti-Euro rhetoric, which allowed them to perform well. Given their left-right divide, almost like a Bernie Sanders and a Donald Trump, will their base really turn out again when a coalition now looks likely? Markets today are saying yes. For Nightly Business Report, I'm Wilfred Frost.
So will the unrest in Europe continue to weigh on the U.S. markets? And what should investors keep in mind when they revisit their investment strategies? Joining us to talk about that is Jack Ablin. He's the Chief Investment Officer at Crescent Wealth Advisors. Good to see you again, Jack.
Hi, Sue.
One of the things that I was hearing from not only investors but traders in today's session is we've seen this story before. Europe had a lot of turmoil about 10 years ago. Greece certainly did. But is it different this time? Do we need to worry about what happened in the past?
Yeah, I think we do. It's certainly a good reference point, Sue. It's that constant reminder that the Eurozone collective, this common currency, this common monetary system is still not cohesive when it comes to a fiscal program, budgets and spending, taxes and the like. And so while, for example, we in the U.S. certainly have quite a bit to disagree about, the simple fact is, yes, every state has a common currency and the United States has a common fiscal program. We have a national budget. Once you get into the common Eurozone, that doesn't occur. And that's really where we start to see these fissures. So we're continually reminded that this is a fragile situation and not subject to a lot of stress.
When we just showed the banks were the biggest losers in the Dow today. Often they are the ones left holding the bag when there are financial crises like this. We saw that with Brexit and so forth. Do you worry about them, or is this the kind of a sell-off that you'd buy?
Well, we're looking at buying. I think ultimately this is a contrived crisis. I don't think this is something that Italy's just going to walk away, default, and and go back to the lira. But I think that it is, you're absolutely right, Bill, that once we get into the financials, once we get into the bonds, that's the circulatory system of the financial markets. And who knows where this, metastasis ends up. And so I think investors in the U.S. were probably, correct in selling first and ask questions later. And you saw the biggest downers in the U.S. financials were those banks and financial companies that could potentially have exposure, maybe not to Italy by itself, but to another big lender to Italy, say a Deutsche Bank or someone else in Europe.
We will be watching. Jack, thank you so much. Jack Applin with Crescent Wealth Advisors.
Now, when there is a steep sell-off like we saw today, investors do tend to take another look at the sectors of the market that have outperformed, like technology. And that's what Dominic Chu is doing for us tonight.
Despite the ups and downs of the overall market over the past few months, technology as a sector has managed to hold up relatively well. While the broader S&P 500 is now pretty much flat on the year, tech is up by over 9% and is just one of 3 sectors that's holding on to gains in 2018. While a lot of attention is paid to the mega cap tech stocks like Apple, Microsoft, Google parent company Alphabet, and Facebook, because they do have an outsized influence on the indexes like the S&P 500 and NASDAQ, they aren't necessarily the best performers so far this year. Within technology, other stocks have produced far better returns. Video game maker Electronic Arts, for example, up nearly 25% year to date. Software maker Adobe Systems has gained around 37%, and computer chip maker Micron Technology has risen by over 50%. That's not to say that those mega-cap tech stocks aren't loved by the experts. According to data from FactSet, some 85% of analysts who track Microsoft stock recommend buying it. 89% of analysts like Alphabet, and 93% of analysts say investors should buy Facebook. Traders will be keeping a close eye, however, on how the chip sector does overall. Over the past few years, the industry group as a whole has been an outperformer, and some traders may be looking towards those semiconductor stocks as a gauge of market sentiment. They helped lead on the bull run to record highs, so will they also lead if the market decides to head south? For Nightly Business Report, I'm Dominic Chu.
Investors were also concerned today about trade after the Trump administration moved ahead with tough measures on China. The White House has renewed its threat to place 25% tariffs on $50 billion worth of Chinese goods in retaliation for what it calls unfair trade practices. The announcement came ahead of a second round of high-profile trade talks between the world's 2 largest economies later this week.
Oil prices extended last week's rout again today. Much of that selling is due to the expectation that OPEC and Russia and other producers are going to wind down that deal to cap output during its next meeting, which is next month. As we reported last week, Saudi Arabia and Russia have already signaled that they are willing to exit that production deal to offset declining Venezuelan production and also the possible loss of Iranian oil due to U.S. sanctions. So domestic crude settled nearly 2% lower again today, now down to $66.73.
Consumer confidence in the economy is near 18-year highs. According to the Conference Board, many are pleased with the current state of the economy, especially the job market. But some did express less optimism about the future, which economists believe may have to do with rising gasoline prices.
But when people do feel good about the economy, they tend to make big purchases like buying a house. And the latest report on that sector shows that home prices are rising at a pretty fast clip. And that has some experts sending out warning calls right now. Diana Olick has our details tonight.
Home prices continue to rise faster than inflation, and there appears to be no sign of easing so far. Prices were up 6.5% nationally in March compared to a year ago. That, according to the much-watched S&P CoreLogic Case-Shiller report. The annual gains have been widening now for more than 2 years. That prompted the chief economist from the National Association of Realtors to warn the run-up in prices is simply not sustainable. And Zillow's senior economist, however, argued that the current price gains, which are the widest in 12 years, are largely sustainable due to the strong economy and strong demand from millennials. He did admit, though, that deteriorating affordability could begin to give some buyers pause and keep them renting longer. In fact, first-time buyers pulled back at the start of this year, according to Genworth Mortgage Insurance. That hasn't happened in 4 years. And in yet another study, Trulia found that more buyers today are actually finding what they're looking for. The caveat, though, that may be because entry-level buyers are dropping out as the number of searches on Trulia shifts to higher price tiers, meaning only those able to afford more are matching up with available supply. For Nightly Business Report, I'm Diana Olick in Washington.
It is time to take a look at some of today's upgrades and downgrades. Ford's rating was upgraded to buy from hold at Jefferies. The analyst says Ford is ahead of its global competitors in rethinking how it allocates capital. The price target is $14. The stock fell a fraction today in an otherwise down market to $11.44. Phillips 66 ratings was upgraded to outperform from market perform at Wells Fargo. The analyst says new fuel rules could be good for the refiners, including Phillips 66. The price target is $134. The shares rose 1% to $116.81.
Quest Diagnostics was upgraded to overweight from equal weight at Morgan Stanley today. The analyst there calls testing labs like Quest a relative safe haven in the healthcare service field. Price target $120. The stock rose fractionally to $106.35 today. And Morgan Stanley also raised its rating on Roku to equal weight from underweight. The analyst cites solid user growth and says that Roku is growing into its valuation right now. Price target $38. That stock was up slightly today to $38.60.
Still ahead, saving for college. There are some simple plans to help finance education. So why aren't more people using them?
A private equity firm that you likely have never heard of is quietly amassing a global food empire, and it grew a bit more today. JAB Holdings has now agreed to buy Pret a Manger. That's a fast casual restaurant chain that has been rapidly expanding here in the U.S. JAB's portfolio of companies is full of familiar names, but its own name is virtually unknown. And it isn't exactly your typical private equity firm either. Pret a Manger, which is French for ready to eat, is a British sandwich and salad specialist with more than 500 stores in 9 countries. Fewer than 100 of them are here in the United States. The deal, reportedly worth almost $2 billion, adds to JAB's rapidly growing portfolio of fast casual restaurants, which also includes Au Bon Pain and Panera Bread, which it bought a little over a year ago for more than $7 billion. JAB also has a portfolio of beverage companies. It owns a number of coffee brands, for example, including Peet's, Caribou, Stumptown, and Intelligentsia. And in 2015, it bought Keurig Green Mountain Coffee for $13.9 billion. And just this past January, it bought Dr. Pepper Snapple for almost $19 billion. JAB is also big on breakfast. It owns Krispy Kreme Donuts and Einstein Brothers Bagels. JAB Holdings is based in Luxembourg. It's owned by the Reimann family of Germany. But unlike many private equity firms, which typically swoop in and buy companies and then immediately start cutting costs, JAB is known for holding on to and growing its assets. As for Pret a Manger, 2017 marked its 10th straight year of growth. So it's clearly on solid footing. But with inflation creep beginning to change the economic environment, questions are being asked about the short-term future of fast casual restaurants. And in case you weren't keeping score just now, since 2015, JAB has spent more than $40 billion on food and beverage acquisitions.
The investment firm KKR makes another bet on enterprise software. That's where we begin tonight's market focus. KKR said it was adding to a series of investments in the tech sector with its latest deal to buy the information tech company BMC Software from Bain Capital and Golden Gate Capital. While the financial terms of that deal were not disclosed, the New York Post, citing one source, recently said BMC could be worth about $10 billion. KKR shares fell nearly 2.5% to $21.91. Shares of Universal Display got a bit of a lift after a South Korean publication reported that Apple will make several of its new iPhone models with OLED screens. The tech giant currently uses LCD screens. Universal Display specializes in OLED technology. Shares of Universal Display rose nearly 4% to 103.60. Alibaba said it is part of a group of investors who plan to take a 10% stake in the Chinese delivery company ZTO Express for just under $1.5 billion. ZTO said the investment will help streamline operations and cut costs. Shares of Alibaba were off a fraction to 198 even. Meanwhile, shares of ZTO Express popped nearly 8% to $20.82.
Elsewhere, petroleum and natural gas producer Sandridge Energy is urging shareholders to vote for only 2 of the 4 directors that billionaire investor Carl Icahn has recommended. Sandridge claims that Icahn, who is the company's largest investor, is attempting to gain control of Sandridge without paying an appropriate premium. Shares of Sandridge Energy were off a fraction today to $14.05. After the bell tonight, HP said that stronger demand for its laptops and desktops helped sales top expectations. The computer maker also raised its revenue outlook for the full year. Shares were initially higher in after hours. They ended the regular session down about 3% to 21.30. Also on After the Bell tonight, cloud software company Salesforce reported stronger than expected earnings, thanks in part to a rise in subscription revenues. The company also gave upbeat sales guidance for the current quarter, and it raised its full-year forecast as well. And shares initially traded higher in the extended session, ended the regular day down a fraction at 126.88.
Well, saving for college is a priority for many parents, and one way to save is by using a 529 savings plan. But many aren't even sure what a 529 is.
No, I don't know what it is.
I have zero idea.
I don't know what that is.
I believe a 529 plan is a plan where you put money away for you start young for your children.
Close. And given that today is May 29th, otherwise known as National 529 College Savings Plan Day, we figured it was a perfect time to talk to senior personal finance correspondent Sharon Epperson. And for those who don't know, Sharon, what exactly? She was very close.
She was very close.
A
529 plan is an education savings tool that parents or anyone actually can use to save for qualifying higher education expenses like tuition, room and board, books, internet access, computer supplies. It is anyone who can set it up, which is a lot of people don't realize, and the beneficiary can be anyone. There are no income limits. And the beneficiary can be your child, can be yourself if you decide to go back to school, can be a grandchild, a niece. And the other great thing is it invests broadly. It invests in many different types of funds, probably not as many as you may like, but there are options there. You have to look at fees also, and you can invest in any state's plan. You don't have to invest in one just because it's set up by your state.
You do it based on where you think the child's going to go to school, maybe?
You don't have to do that either, but you may, depending on what kind of break you're going to get, if you do it in your state, you have a better chance of getting a state income tax deduction.
Now, a wise sage told me many years ago, when you're prioritizing at a certain point, that you should save for your retirement ahead of your child's college education plan. How does this factor into all of that?
You have to do both.
Yeah.
That's the hard part.
Yes, you find that out.
You actually have to do both, and you can't do either or. What you should do is get the free money first. So if you have a 401k plan at your job, you want to contribute that at least enough to get the matching contribution and get that free money. But then you have to also think about how you're going to save for your child's education. And just $100 a month, if you start when the child is born for 18 years, you'll have $21,600 saved. And if that money grows at 5%, you could easily have $35,000 saved for at least 1 year of college, maybe a little bit more.
What about financial aid? Because a lot of kids want to get student loans or qualify for financial aid. Does what you have saved in a 529 impact that?
It does, because you have to include it on the FAFSA form, that free application for federal student aid form. You must include the fact that you have a 529 plan, but it'll count if it's in the parent's name as the parent's asset. And so that does not impact you as negatively as if it was the student's asset. So that's something to remember. And a lot of grandparents want to open a 529 plan for their grandkids.
Exactly.
That doesn't count on the FAFSA form at all. But then when they take that money out and give it to the child, that does count as the student's income.
All right. You're done.
I'm
done.
done. You still have to worry about that.
I still have to worry
So
about
do
that.
you.
Thanks, Sharon,
Yes,
so
I
much.
do.
Sharon Epperson.
Sure.
Someday I'll worry about the grandparent thing.
There you go.
Coming up, why Solo failed to find the Force and why Disney may now have to rethink its Star Wars strategy. ABC has canceled its top-rated program Roseanne following a series of offensive tweets by the show's biggest star, Roseanne Barr. In a statement, ABC said, and we quote, "Roseanne's Twitter statement is abhorrent, repugnant, and inconsistent with our values, and we have decided to cancel her show." Before the cancellation, Barr herself apologized for her tweet that targeted Valerie Jarrett, who was an advisor to former President Obama.
Starbucks closed more than 8,000 stores today for a few hours for racial bias training. As we reported, the training comes more than a month after a Starbucks manager called police on 2 black men who had been waiting in the store for a friend before buying something. Analysts say the store closures could cost Starbucks $12 million in lost sales.
Now, Starbucks chose to conduct this racial bias training in a very public way, and as Sue just mentioned, at a financial cost as well to the company. Other companies do similar training, but they do tend to not draw attention to it. So is this a good strategy, not just for Starbucks, but for other brands as well? Joining us tonight, Dean Crutchfield. He's a brand expert who runs his own company, Dean Crutchfield Company. Dean, good to see you again. Welcome back.
Good to see you guys.
Are there risks to this kind of public display of teaching your employees about racial bias?
Well, it's really a question of delivering it. You know, purpose builds profits, or at least that's the strategy. So really, it's a question of can you actually deliver it? And that's really what we're questioning with Starbucks today. You know, they're under pressure to show their leadership and their impact on these very sensitive issues of gender and race. And it really is a question of, you know, what they deliver once they actually do this. The most important thing is they are saying they're prepared to take a hit in their business to actually do something right. So in a sense, that shows the goodwill of their intent.
Does it match up with their pledge of social responsibility? It seems as though it does.
It really aligns very well, actually, with the core strategy at Starbucks. In fact, part of their vision statement wraps around inspiring and nurturing the human spirit. So I can't think of 2 better subjects than gender and race to actually answer that as a strategy and show that it really delivers what it means. So it's not so much your ability as a business, it's more about the choices you make that define who you are. And Starbucks is making a very deliberate choice here in terms of this strategy to, as it were, train away implicit bias. And I think, to your point, this has been going on for decades. Many companies, police departments have all been trying to train away implicit bias. And really the question is, does it work? And I think that's a big question here.
And because it was so public with this, the closing of the stores and everything today, I mean, obviously they're trying to spur the national conversation in that regard. Do you see other companies then maybe following their lead in this?
Well, I think, you know, a leader has to lead, and I think that's what Starbucks is doing. You know, there's massive disruption happening in the market out there. Customers want to know about the brand's values. They want to know if those values align with them. They want to know where you stand on race and gender and environment. They want to know what your leadership is and what your impact is on those issues. It's very different from what it was before. So I think what we're seeing here is Starbucks leading the charge of something we'll be seeing more and more, which is about purpose-driven brands.
Dean, always good to see you. Thank you for your thoughts tonight. Dean Crutchfield with Crutchfield and Partners.
Expectations were high for a big weekend at the box office, but that's not what happened, even with the debut of the latest Star Wars movie. And that raises questions for Disney, which saw shares fall today, about one of its most lucrative franchises. Julia Borston has the details.
It was a perfect storm of timing, competition, and perhaps Star Wars fatigue. Solo bringing in $103 million at the domestic box office over the 4-day holiday weekend, under already lowered expectations. And internationally, the film brought in just $65 million. Solo's global take just more than half of Disney's other Star Wars spin-off, Rogue One's in its December 2016 debut. Perhaps the biggest factor depressing Solo's performance, it's been just 5 months since the last Star Wars film, whereas Disney's last 3 releases were a year apart. It's also the first to be released in the crowded summer season.
With The Last Jedi fresh in the minds of moviegoers and to have so much competition over Memorial Weekend, from Deadpool 2 in its second weekend, Avengers Infinity War in its 5th weekend, this made it tough for Solo to really break out and exceed expectations.
FBR analyst Barton Crockett projecting, quote, that Solo will be close to break even over its life versus the $400 million profit we had assumed, about a 2% headwind to Disney's estimates this year.
Here you are, enjoy.
Now the negative impact to Disney all hinges on how the movie performs in the coming weeks, when it's up against less competition, but also faces less than stellar audience reviews.
I think what Disney is going to do is take this as a lesson and apply it going forward. The Star Wars brand is massive. It's going to be playing out for decades to come. So for Disney, this being a long-term play, and with a lot of projects in the works right now, and Episode 9 set for December 20 of 2019, Star Wars has nowhere to go but up.
And it's worth noting that the next Star Wars film, which had been scheduled to premiere next May, Disney moved back to its traditional Christmas release window, when the Force won't face this kind of intense competition from superheroes. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And before we go, another look at the day on Wall Street in this sell-off. The Italian election results over the weekend had the European markets lower, ours as well. The Dow down 391 points. The Nasdaq fell by 37. The S&P 500 down 31.
What a way to start the week, right?
Indeed.
All right. Well, that does it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. See you tomorrow.